Hey, good afternoon. Finally, this is the big animal that we've been waiting. So I told you earlier, I cannot trade before I see the NFP. So this whole week I've not been so much in trading, but you can see that the way price is just moving. So anyway, guys, NFP is here. Non-farm payroll. Non-farm payroll, in short, this is the change in jobs in the economy over previous month, so like January, February, and right now March. So each and every month we get the NFP for the previous month. So today we are releasing the NFP, non-farm payroll, for the February we are releasing NFP, non-farm payroll, for January. So right now we are releasing for February, and this non-farm payroll is not including the farm workers or private or any household employees. Each and every time we are getting data negative or a reduced data in market, a reduced data to release, they are released out, all pairs against US dollar, we always buy, like euro, USD, gold against US dollar, all pairs like this against US dollar, we always buy if data is negative. If data is positive or it's increased, all pairs against also we sell. You know, I focus always so much on gold. I don't focus on so many pairs. I focus on gold mostly, and I like it because of the trendy. You can see right now it's very trendy right away. See the way it's just flying, yeah. So you know, when we have a reduced data, this means that employment claims in market. If we have a reduced data, if data goes down, means that unemployment claims has increased going up, and meaning that the economy of that is not in a very good state because unemployment claims are increasing. So data that we get is reducing. So at that point, hourly earnings will decrease because we have an increase in unemployment claims, and now that hourly earnings will come down. And now the dollar will also fail and sell. That's why when it fails, we buy gold. So the decrease in at any point in dollar or the decrease in data, we're getting it a buy in any pair against US dollar. So an increase in data, if data comes up increasing or increasing from the previous one, unemployment claims always will go down because we are getting the positive data. So unemployment goes down and hourly earnings goes up because right now the data is positive, the economic state is very good, and now hourly earning is high, and now the employment rates are not high, they are decreased, they are going down, and now the dollar is very stable, it's buying. So all others we sell gold or any other pair against US dollar. So let me go just a preview of this data. January data. So if you see January, February, and March, January data, from the January data means what? In this January data, this is December data, but we release in January. This one is February data, this is January data. So today we are releasing now February data. So this is now the payroll farm non-farm payroll of now February. So in January, the previous now, which was the December, we got 199. So 199, which was from November. So 199 from the previous, and January released what? Released 216k. So this one was an increase. So an increase or a positive in data. So I said here, increase or a positive, we sell what? All pairs against US dollar. So we were selling gold. And here in unemployment, this and everything goes again the same, because when we are selling gold, all employment claims, when you are selling gold, all employment decreases, hourly earnings is increasing because the dollar is becoming strong. February we got 216. Previous was 216, which we got here for January. So we got previous, this is the previous now, from the one released last time, exact one. Now the previous that we're having here is 216, and the exact was released, it went up high. So we're going higher, made now unemployment rates, the claim of unemployment was down, and now the hourly earning was going up. So we were selling gold. So that was February. Now in March, still you can see what is happening in gold market. You can see everything that is happening in all market. So meaning that if you see all the data we've been getting, like all this week, unemployment claims that we got unemployment, jobless claims that we got yesterday, all the data that we've been getting, is it positive or negative? So for me, for my own analysis and for the forecast that we were looking in market, it can be right or wrong, but I just focus on this 200k, but not because of this. This is not a difference of a bigger difference, but because of this is March and the January investors got into market with 216. So I expect the data to just reduce by some thousands, almost 15,000. And if this is not going to be 200k, it's going to be 330k. So it will reduce by minimal for the investors that have been in market, for the rates. Because you are not rates, I'm sure that what you heard from what was released from the chairman of say that the rates to be cut, it cannot be that quick right now. So we don't expect rates to be cut in this month already. It can maintain the rates. Maintaining the rates is like maintaining the investors that were in market. So it can remain, it can come to investors that were in market. That's why I'm focusing this position. Meaning that if this goes down, gold will still buy a bit, then now sell, coming to the position of where we were in January or February, mid of February. So meaning that we will buy still and then we sell gold at that position. Anyway, let's meet and watch first. We see what are going to be released out. Then we can now trade. If going to be positive or negative, we know that if positive, if it increases or reduces, we're going to see after it has been released and we see the data, we can now jump into the market. Or we do what we always do, the aging. So let's meet, we watch that news. All the best to everyone.